Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Markets tumble as new cases of COVID-19 continue to surge in various states across the country. New York, New Jersey, and Connecticut now requiring visitors from virus hotspots to self-quarantine. You also have Florida and California setting new daily records. And the governor of Texas saying a massive outbreak is now sweeping the state. This is the White House is weighing new tariffs on $3 billion in exports from France, Germany, Spain, and the United Kingdom. The tech-heavy NASDAQ even falling for the first time in 9 sessions. Our Abigail Doolittle has been watching all the action. So, Abigail, why the sudden drop today?
Well, it seems that reality is finally catching up to what's happening for stocks, because it's been a bit of a period of disbelief for many market watchers over the last number of weeks as stocks have simply climbed, especially that tech-heavy NASDAQ just yesterday, an all-time high, even as we've had some disappointing economic data and more recently over the last 2 weeks, news around these virus hotspots here in the U.S. So today, some of the information sadly coming out really hitting stocks. The S&P 500, the NASDAQ 100, both down more than 2%, the worst day in 2 weeks. Really a continuation of that big 6% sell-off we had 2 weeks ago. Volatility breeds volatility. It's also showing up in other asset classes. High-yield bonds, that ETF down more than 1%. Bonds themselves rallying. So it was a true risk-off day. So I think it was really the virus fears weighing on stocks. But another factor, Emily, you were talking about that NASDAQ 100. I was just talking about it at an all-time high. It's amazing how far it has gone. Probably too far, too fast, really climbing that wall of worry. Now maybe a little bit of a pause if the bulls are lucky, or that's a pretty steep uptrend. You could even make the case it's a parabolic uptrend. Per physics, that cannot hold. A 90-degree angle will not hold. So you could see potentially a pretty bad decline. Hopefully that does not happen, because it probably would mean that the virus situation here in the U.S. gets worse in the economic situation. But that possibility is certainly contained within that chart of the NASDAQ 100.
Abigail, shares of big tech down just about as along with the rest of the market, like Apple, like Google. What stocks did you see that felt the most pain? So
it's interesting because Apple and Microsoft, those were the stocks that weighed on the markets the most because of the weighting, and lots of attention going to that. The NASDAQ 100, I think it's a 40% weighting, to the S&P 500, 20%. But the big declines naturally came from some of those virus-sensitive stocks and sectors, travel and leisure in particular, really taking a hit. Some of the cruise operators, along with some of the gaming stocks, really down sharply. The cruise operators on the day, Norwegian Cruise Lines, along with Carnival and Royal Caribbean, all down more than 10%. Carnival actually getting a downgrade over at S&P to junk, so another fallen angle. Norwegian Angel, I should say, Norwegian Cruise Line, they were cut to neutral over at Barclays. These stocks, Emily, down about 70% on the year because it seems as though the ability for them to get back into the water is being pushed out as the virus situation worsens. And Wynn Resorts down as well, down 11%, because if the virus fears really reemerge, and from what I have been hearing, this is not really a second wave. This is the first wave, but a big spike in it. So the fears of a second wave could really weigh on this sector in general. Certainly seeing that fear today.
Meantime, you've been following some other indicators that are a sign of sentiment. The yen, bonds, what are you seeing there?
So over the last couple of weeks, we have seen a rally for those haven assets. So that pointed to the possibility that we could see a risk-off day such as today. Confirming that possibility sector-wise, Emily, because the new defense this year, it's hard for me to get my mind around it, but the new defense is tech and some of the big consumer discretionary names, including Amazon, even though it's recently been at an all-time high. So over the last 2 weeks, stay at home, that new defense of tech and consumer discretionary outperforming. Still down because the tone is a bit risk off, down by about 1.6% to about 2%. But the cyclical sectors that had been starting to do better a number of weeks ago, really taking a hit on the last 2 weeks, down about 8% to 12%, a bearish tone there. And the Dow Transports, the index perhaps most sensitive to the virus, Emily, that is underperforming on the year, nearly in a bear market. So it seems as this virus fear, these new fears reemerge, it's starting to take a toll on the markets as investors and traders worry that it could provide an additional hit to the economy, Emily.
All right, Abigail, thank you so much for weighing in. Meantime, as I mentioned, Google shares down a little more than 2% at the end of the day. Google now also tweaking its data policies after being scrutinized for years. The search giant is planning to yet let new users automatically delete all of their data and notify current users that they can as well. Joining us now, Garrett DeVink, who covers Alphabet for us. So first of all, Garrett, how significant are these changes?
To be honest, I don't think they're very significant at all. And I think it's interesting that Google chose to make a pretty big deal about it. I mean, they sent an email around to dozens of reporters last night saying, make sure you get up early in time for this call. And we had a call with several executives. But, you know, the more you look at this announcement, which is essentially saying that new users who sign up for a Google account, you know, from scratch, I'm not sure how many of those people are left in the world who don't already have a Google account, their data settings are going to be to automatically sort of scrub the data that Google has collected on them after 18 months. But for that 18-month period, Google, you know, will continue to do it to sort of serve them targeted ads and to help them build new products based on that behavior. And, you know, this is something that we can already do. Anyone can already go into their Google settings and just tell Google, stop collecting my data. But Google is sort of trying to find these new ways that are sort of in between the always on and always off data collection. And I think it's because they're worried that more and more people will just do the always off option. And by giving them sort of a middle ground, it allows Google to continue to collect data, but sort of speak out to consumers and regulators and say that they are trying to be more privacy conscious.
How much do you think this has to do with renewed antitrust scrutiny? We just spoke to Congressman David Cicilline last week, who's the chair of the House Antitrust Subcommittee. He's certainly not happy about the power that Google has amassed. Is this sort of a nod to regulators to say, look, hey, we're not keeping all of this stuff, and you should take a look at that?
I do think that it's something that, you know, as more and more privacy legislation comes into effect, of course, in California, we have the date for when the new privacy law can be enforced by government coming up next week. I think that this does allow Google to, you know, whether it's when it's talking to consumers or the press or to politicians, they can point to these changes that they've made with privacy and said, look, we're hearing what you guys have to say and we're making changes. And to be fair, you know, Google is working really hard to sort of run its business by using a little bit less data. They talk a lot about how using special AI technology, they may not need to crunch as much data as they said they needed to in the past. And they're working on solving these problems of using less data to still run their business. But at the end of the day, this company relies on data to, you know, sell its ads and to build its products.
All right, Garrett DeVink, who covers Alphabet for us. Garrett, thank you so much. We'll continue to follow those changes. Meantime, could we be nearing the end of the email era? Slack is now out with a new product that doesn't just allow people to communicate with each other within the same organization, but allows different organizations, multiple different organizations, to collaborate. We're going to hear from co-founder and CEO of Slack, Stuart Butterfield, next. This is Bloomberg. With millions of people around the world still working from home, Slack is now out with a new product aiming to transform business and especially virtual business for good. After 4 years in the making, Slack Connect now allows employees to not only chat internally with each other, but also collaborate with external partners, clients, and more. For more on the launch, Slack CEO and co-founder Stuart Butterfield is with us now. So Stuart, Slack for so many years has been touted as an email killer, and unfortunately that hasn't quite happened yet. But is the hope that this is the nail in the coffin for email for good?
I don't have anything against emails. And I think that ultimately this can be a benefit for email. So let me back up and say Slack Connect is kind of our answer to the question, how could we improve email? And I think we've done a great job of that with internal communication over the years. You have 122,000 customers around the world, government, nonprofit, academic, corporate. But a lot of the external communication, which is a lot of what people are doing at work, still happens over email. It can happen over text messages. It can happen in WhatsApp, other apps. And the challenge organizations face is one of the quality of collaboration. So I think moving to channels is a huge step forward there, but also around that communication happening out of band and them not having access to it, potentially being out of compliance with whatever regulatory environment they're operating in. So the thing that I think is a little unique here is it's both a step forward in user experience and in security. And usually you have to choose between those two.
Now, this is something you've been working on for 4 years, so certainly long before the pandemic. And Slack, of course, has been a winner, so quote unquote, in this pandemic in terms of all the usage that you've been seeing. Investors didn't seem to love this announcement today. Shares down more than 6%. Why do you think that is?
Was the stock price right yesterday? Will it be right tomorrow? I don't think it's something that we can draw a useful signal out of at this time, just because of the overall macro environment. But I think the important thing for us is, do customers love it? Do customers get value out of it? And I think the answer there is unequivocally yes. And even in our own experience, we ran our recent convertible debt raise process in a channel that was shared with Goldman Sachs and Morgan Stanley, Jay Wood and Latham, the lawyers. And that was just like transformative to how well we were able to pull that off, especially in an environment where we couldn't do an in-person roadshow, where the normal kind of mechanics of that kind of bond offering were out of bounds. And it was a smooth process. So I think we'll continue to see that, and customers will continue to invent new and interesting use cases.
Meantime, you have been very outspoken on immigration issues. You have the president now temporarily halting guest worker visas. I know a lot of Slack is actually based in Canada. What's your reaction to this? And have you ever thought about moving the company to Canada for good?
We have 15 or 16 offices in 10 different countries around the world. So it's a pretty international company already. Look, I think this is a poor decision. It's bad for business. It hurts the economy. It's bad for our society. If I have anything good to say at all, it's that I hope that it's temporary. And I believe that it will, because this is it's political posturing as opposed to any sort of policy making that's aimed at the public good.
Meantime, you've been incredibly vocal about the renewed momentum behind the Black Lives Matter movement. And I know Slack has always strived for very high standards when it comes to diversity. Are you seeing things internally at your own company that even you and Slack could be doing better? And how are you, responding to all of this as a leader?
Yeah, it's let's say it's an interesting time to be a leader, because there's that, and we have the pandemic, and of course all the regular challenges of business and record unemployment and everything else. But this one's important because these are our people, these are our customers, these are our employees, these are our friends, in some cases our family. And I would say the conversation has been elevated in importance. I think it was always important to our Black employees, but maybe didn't have the same emotional power or impression with the broader population. And yes, of course, there's a lot more that we can be doing and should be doing. And I think since 2015, 2016, we've made real efforts to increase the representation of underrepresented minorities broadly, but Black people specifically in technical roles and in engineering. And because of that, I think we bring up the average for the industry. We're ahead. It's still not great numbers, but that's where we put the effort in, and that's where we saw the results. And then now we kind of step back and look at the business side, and it's 1% instead of, or 2% or something like that, instead of the 4 or 5% we see in technical roles. So it just goes to show that we need to make sure that effort is sustained and that we're actually paying attention.
Meantime, Stuart, we were talking about Google and antitrust issues earlier. We know that the U.S. government, the European government, is increasingly looking at big tech companies, Google, Apple, Amazon, Facebook, over antitrust concerns. As somebody who has built and run a company successfully and successfully competed against some of these big tech giants, do you believe that these companies are stifling innovation?
I don't know if I'm smart enough to say, and maybe if I give you a short enough non-answer, I can pivot back to the Slack Connect stuff. But I will say this, competition is very important for the functioning of the market. Sometimes that requires interventions, but these cases are so complex and there's so many jurisdictions, so many laws, so many regulations that I am happy to leave these ones to the lawyers and to the regulators and not have to solve those problems myself.
All right, Stuart Butterfield, CEO of Slack. Thanks so much for joining us to talk about that and the Slack Connect news. Always good to have you here on the show.
Yeah, thank you very much.
All right, coming up, more on the president's decision to halt guest worker visas for foreign workers coming into the United States. We'll talk to Kleiner Perkins partner Ilya Fushman about that and much more next. Leaders across Silicon Valley are among the biggest critics against President Trump's decision to temporarily halt guest worker visas to the United States, which are widely used across Silicon Valley. One executive familiar with the immigrant experience and its contributions to the tech industry is Ilya Fushman, partner and managing member at Kleiner Perkins and a former executive at Dropbox. Ilya, you're a U.S. immigrant, along with so many folks who work at Kleiner, folks who run and founded many of your portfolio companies. What's your take on the social and economic impact of this, not knowing how long these visas will be suspended?
Well, first, thanks for having me on, Emily, to talk about this. As you mentioned, it's important. It's personal, not just for me, but for our firm. And I think it has tremendous impact on our industry and really the economy as a whole. I immigrated to the U.S. in the 90s on a J1 visa. I became a citizen in 2003. Mamoon Hamid and Wanshay, my partners, came in on H1B visas. More interestingly, about 50% of our portfolio company founders are immigrants. And in our most recent few funds, that number is somewhere between 60 and 70%. These are obviously household names like Google and Slack, but also some amazing new coming companies like Nova Credit, Plastic, Netlify. These are companies that are helping immigrants, that are helping small businesses, that are building the next generation of enterprise software companies. And overall, there are about 3 million immigrant entrepreneurs in the U.S. That are creating jobs. And if you want to look at H1B visas, I think for every H1B, there are about 2 American jobs that get created. So not just direct job creation, but also kind of the heart of innovation is at stake here, which is why Kleiner Perkins joined about 323 other businesses in signing a letter imploring the president and secretaries to reconsider this this order, because the global technology stage is quite competitive. I think these visas offer us the opportunity to capture some of the best talent from across the world that has been educated, that wants to have a tremendous opportunity in life, and bring them here to create value, not just for America, but for the rest of the world eventually. And if we slip in that, if we fall behind, these are compounding losses, and we might never catch up.
Now, a number of immigrants have been sharing their stories online, and one of the headlines that caught my eye was, do U.S. citizens understand how stressful it is to be an immigrant in this country? How stressful is it?
It's very stressful. We actually immigrated multiple times before even coming here, and uprooting and making the decision to leave behind family, leave behind a life, circle of friends, and take a plunge is incredible stress in itself. And then coming here not knowing what it truly looks like on the ground is even more stressful. So these are folks who are incredibly motivated, not just to succeed, but also create impact, which is, I think, why a lot of immigrants make tremendous founders. And the immigrant experience is hard, right? Imagine restarting your life anew in a place that you don't really know, and then trying to connect with your family and friends that are still abroad. So there are many stresses here, and if we should be making those a lot easier, because folks ultimately want to come here to build a new life and see the U.S. as a land of opportunity.
Meantime, I know you've been investing your latest fund in obviously completely unprecedented circumstances, not just a social crisis, but an economic crisis and a health crisis. What kind of new opportunities are you seeing, or perhaps I should say, how optimistic are you that there will be new money-making opportunities coming out of an economy that's in a recession and tens of millions of jobs lost?
It's first of all, we live in truly unprecedented times, and both the job loss and the tumultuous nature of the economy that we're in today are truly unprecedented and historic. So my hope is that we can get through this. And early on in the pandemic, I think we saw some really good leadership from technology companies, whether it's helping hospitals source personal protective equipment or rebuild ventilators. We've also seen the pandemic change the nature of how we live our lives and how we work. Remote work, distributed work has become a pretty constant, clear theme. And you have companies like Slack, like Sigma, like Loom in our portfolio that are helping people do this better. They're tapping into new audiences that they hadn't really had before, like educators, which I think is a net benefit to certainly our society. And we're seeing companies that become incredibly relevant in these times as people deal with stresses. So a company like Modern Health is helping people truly deal with mental health stresses as they live through these times. And sometimes you see incredible tailwinds that are just bringing delight to people with companies like Cameo. So, the way we stay sane is we send each other cameos every once in a while, which has been fun. So we're in a pretty strong inflection point right now. I think the world is in a stable state, but I think it has a long time to go. But I'm very optimistic that these shifts will create new opportunity, certainly around the future of work. And I think we'll see where the more social experiences land as we get closer to potentially a solution for this crisis.
So we have about 30 seconds left. How different do you think Silicon Valley looks in a year or 2 years? Do you think companies are going to be a lot leaner and smaller, given, having to do these layoffs and, potentially save for the future?
Well, certainly I think companies are going to have leaner real estate footprints. I think a lot of real estate, office space, potentially even travel that has been thought of as a core part of work may not, we find, be necessary. That said, I think these companies will continue to operate the same way they do today. So we'll see some changes in physical structure and layout and in more distributed workforces. But ultimately, the nature of the work is the same.
Ilya Fushman, partner at Kleiner Perkins, thank you so much for joining us. Coming up, the owner of the Boston Celtics and co-chair of Bain Capital, Steve Pagliuca. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Twitter and Facebook continue to take different stands on President Trump's post, while Twitter quickly put a warning label on a post from the president threatening, quote, serious force against protesters in Washington, D.C. That same message on Facebook remains untouched. Earlier, I asked former Twitter CEO Dick Costolo what stand he would take.
There are just all sorts of implications that go into these decisions. They're not as easy as we should just do X and move on. And I think the company is doing the best they can with it. I think one thing that probably surprised them and certainly surprised me was this sort of call out to one of the junior executives in the company, not somebody who should have any expectation that they're going to be brought to light by the White House as someone who should be attacked verbally. And I thought that was really sort of out of control from the White House.
You're referring to the president tagging a specific Twitter employee in a tweet.
And Kellyanne Conway going on the air on TV and calling that person out. One of the things that these folks should realize is when that happens, death threats and other kinds of violent threats immediately follow. I can tell you that as a fact from sitting in that chair. When political leaders, geopolitical leaders around the world say anything negative about an executive inside the company, there are immediate threats of violence, and it's impossible to tell how seriously you should take those. So that sort of targeting of a junior executive that should have no expectation of that sort of call out, I thought was a little bit beyond the pale.
So to be clear, Twitter is taking more aggressive actions than they have in the past. Do you believe that's the right call?
You know, listen, I have very strong opinions about these things. And behind closed doors, I tell people what they are. But the reality is, it's so easy to go on TV and say they should or shouldn't do this. I don't have to face any of the consequences or implications or death threats, as I've just said, that go along with that decision. So I'm never going to sit here and say they should have done X. It's kind of like being a Monday morning quarterback when they go, oh, you know, that was a bad call on 4th and 2 and they ran it. Well, yeah, we know they didn't get the first down now, so obviously it didn't work. That sort of thing is when you're sitting in that seat, all the other complications that go into the decision and factors that go into the decision and not having to deal with the implications are a lot more complicated, and I think they're doing the best they can.
Okay, so maybe I can convince you to share your opinion when it comes to another company, because Facebook has left that same post up, other posts up unchanged, and also getting a ton of backlash. Is that the right call?
The idea that they're going to have this third, this independent board that's going to review content and make decisions about it, it sort of strikes me as a punt. You know, like they're not going to be able to react in real time at all. The company gets to abdicate its responsibility for taking action. If you're going to have an algorithmic timeline where you decide what you're going to show people, you also have to take responsibility for deciding what sort of editorial decisions you're going to make around that. And the notion that you can have an independent board that's comprised of a group of academics that's going to get together and make decisions in anything close to real time is just not going to happen. I mean, it was sort of obvious by the fact that they can't even decide when they're going to first get together and be able to have their first meeting. You know, that doesn't strike me as a board that's going to be able to react 4 minutes after a post goes up as to whether it should be edited or taken down or not.
So what do you make of Mark Zuckerberg's position that he doesn't want Facebook to be an arbiter of truth, and yet they do fact check other kinds of speech, just not political speech, and they continue to take money for political ads?
Well, I think they're an arbiter of what people see in their timeline, so they have to be an arbiter of whether that information is misinformation or not. I think there was an article out this morning about you know, the fact that some of these climate deniers are able to slide their opinions through, they're able to slide articles through that have details in them that are passed across as fact that are simply aren't facts and are misinformation. And it's been decided apparently by Facebook that, well, those are opinion pieces, so they're going to be allowed to go forward. If you have a article that poses as research containing facts, it's hard to pass that off as an opinion piece and, again, abdicate the responsibility to edit misinformation. So I just believe that if you are going to provide people with an algorithmic timeline where you decide what they get to see, it's your responsibility to decide whether that information is misinformation or not.
You've now got some advertisers boycotting Facebook. Do you think that's actually going to make a dent in the revenue or have an impact on how they deal with these issues?
I don't know what the answer to that is. The results from Facebook and others have appeared to be that the juggernaut continues from the really big advertising giants. I know there have been some fall off in travel advertising and hospitality advertising that Google has announced has affected them a bit, and probably Facebook as well. But they just have so many millions of advertisers. It's hard to see that a few are making a dent. That doesn't mean that there won't be more. And so I don't know what the long-term impact of that's going to be.
Now, as Trump potentially tests the limits of what's possible or even provoke these platforms, this is bound to happen again on the road to the election. I mean, how do you expect or hope to see these companies handling this over the next 5 months?
I think the companies should have every expectation that the boundaries are going to continue to be pushed. They'll have to make hard decisions about those boundaries. And one thing we can be sure about is that there will be people on both sides that aren't happy with the decision. That's just the world we live in now, where you've got that sort of voice in the White House who doesn't seek to, who doesn't mind if that's the way it goes, if it's a divisive commentary and people come down on either side of it. So I think the companies need to be prepared for that. I'm sure they are. I'm sure they have constant discussions about what are we going to do if. and we'll see what happens. The actions Twitter has taken and the overreactions I think that they've gotten for what I would consider to be first steps just shows you how these companies need to be prepared to deal with complications and implications they might not have expected.
Now, on that note, I know you dealt with plenty of thorny issues when you were CEO. Do you recall anything similar, or is this crossing a new line?
Nothing like this, where it's the president of the United States saying things that you have to ask yourself questions about whether you want to show to people or not. But surely, all the time across the world, I remember, and they're always hard decisions. There was that instance in which ISIS was posting, members of ISIS were posting photos to all sorts of social media about the pilots they had burned alive in those cages, and we made a decision in real time that, look, any account that posts these photos needs to be suspended, permanently suspended. Seems like an obvious decision. Well, if I recall correctly, it might get the specific paper of record wrong, but I believe it was the New York Post had that photo as the cover of their the cover story of the New York Post the next day, and of course they posted it to Twitter, and here's the image. And so now what do? We got all these emails and texts. You've got to permanently suspend the New York Post. Well, we're not going to permanently suspend the New York Post, and now you're made to look like, well, how come it's okay for these people to post it and it's not okay for these other people to post it? So you just run into these kinds of things when you're running these companies on a regular basis. And I think that the thing you have to understand is that you can't just make simple rules and policies that you can assume are going to always apply in the future. There's always some new edge case that is problematic for all sorts of reasons. And you're going to have to go into these things with an understanding that we'll always have to be making reactions in real time and not just saying, going and looking at our existing policies and deciding which apply and which don't.
So either in 5 months or 4.5 years, if Trump is no longer president, or when, do you think that hurts Twitter's engagement?
The thesis that the reason Twitter hasn't taken action A or action B is because Trump is, so great for their financial results, I think is nonsense. The company will be fine with or without user X on the platform. More and more people are using the platform as a source for real-time news, what's going on in the world right now, and reactions to real-time news. And I think that they'll be just fine, irrespective of who the president of the United States is. I mean, I would go even further maybe to say there would probably be some relief if they didn't have to think about whether or not to censor a tweet from a leader of the free world every day, and the implications and following threats based on their actions would probably be a relief to many inside the organization.
Now, last time we talked, which was about a week into the shelter in place, you said you were buying stocks. Now that we're in a recession, you've got tens of millions of people having lost their jobs and perhaps a different economic outlook. Are you still buying? What's your strategy?
Well, I'm not as much of a public market investor right now because there are so many opportunities in the private markets for Adam Bain and I, my partner at H1B Advisors. We're just seeing enormous opportunities in the private markets to invest through our fund. Great enterprise SaaS companies, emerging enterprise SaaS companies. You can see the valuations that these enterprise SaaS companies are getting and how they really act like snowballs rolling downhill and gathering more and more and more momentum and getting bigger. I think some of these companies are bigger than and even optimistic investors 4 or 5 years ago ever thought they would be. I'm not just talking about Zoom, I'm talking about Twilio, Okta, MongoDB. You can name dozens of these companies that are just so much bigger than I think even optimists thought they would be. There are a bunch of those companies, earlier stage companies in the private markets, and we like a lot of those. There's a obvious opportunity that's been accelerated in telehealth, mental health, the combination of the two, we're investing there. There are opportunities in the machine learning space around healthcare.
We're speaking to each other from our homes. Jack Dorsey has said Twitter employees can work from home forever. Obviously, that'll affect some of the companies that you're working with as well. Is that a good call, or does that pose Too many challenges.
It's a very Jack Dorsey call. The Dick Costolo call is not forever, but I think good for him. The guy is nothing if not pushing the envelope on things, and that goes for voting a national holiday for for his employees at both Square and Twitter and other actions he's taken. I'm much more of a person that likes to be around as many people as possible in the office. The more, the better. And so for me, I think it'll be more of a you can work from home, and we obviously now have the tools to prove that you can do it productively. And I think CFOs will be looking at travel budgets in the future and saying, did we really need to send those 24 people out to the Consumer Electronics Show? So I would think you'll see a slowdown in those kinds of events in the future, I assume, because these companies have been just as productive or almost as productive without any of it. And I think remote work is for sure here to stay. It's just a question of what percentage of the workforce will be doing it. I don't think it will be everybody at most companies.
But can you be as productive with all or even some
Yes.
of your workforce at home?
With today's tools and technology and the communication mechanism, 100%. I think if it were 5 or 6 years ago, now the answer is certainly yes. And there are as you would imagine, a number of emerging companies in the remote workspace that will make it even more seamless and easier. And I think the answer to that question is yes, going forward.
Dick Costolo there, former CEO of Twitter, now founder of H1B Advertisers. All right, coming up, he is leading the charge on reopening the economy in Massachusetts. We'll talk to the co-chair of Bain Capital, Steve Pagliuca, also the owner of the Boston Celtics, about basketball and more next. This is Bloomberg. Welcome to Bloomberg Television and Bloomberg Radio. I'm Emily Chang in San Francisco. While he is best known as the co-chair of Bain Capital and the owner of the Boston Celtics, Steve Pagliuca is also carving a new role for himself in the state of Massachusetts, a spokesperson for the business community. Pagliuca has taken an active role in fighting the pandemic, helping to form an advisory board of executives and medical experts to help the governor as the state moves towards reopening the economy. Steve joins us now from the great state of Massachusetts. Steve, thank you so much for joining us. First of all, what is the state of reopening there, and what's your view into how well businesses are surviving?
Well, so far it's going very well. There was a large joint effort, as you referred to, with the Mass High Tech Council, the Governor's Council, academics, business people, medical people, and we went through a huge effort under the leadership of the Mass High Tech Council to really look at the COVID-19, and this was probably 10 or 11 weeks ago, while people were focusing on fighting the virus at the hospital level. We were focusing on how would we reopen the economy once the hospitals were stabilized. And the governor and the Secretary of Health and Lieutenant Governor, I think, have done a very nice job in Massachusetts. In fact, I just saw the data today. Massachusetts has the lowest our T factor, it's 0.66 of all the 50 states right now. So far that program has worked very well.
Now, as the co-chair of Bain Capital, you've got such an interesting vantage point. What does the economic recovery look like to you? Is it a V shape or a deep V shape, as some have suggested?
Well, I think it's probably a kind of series of W's. We're going through right now nationally a second wave in many of the Western states and Florida. And so that's the markets dropped today. That's going to affect the economy. So it's very uncertain. The Fed has piled in with $10 trillion of government spending. And that's, I think, kept businesses going and the markets up and consumers, even with the high unemployment spending. And therefore, it's kind of blunted the economic impact of the virus. But hopefully we can keep that up and get these other states turned around in time for some kind of therapeutics or a vaccine to come along in the first or second quarter. I'm much more optimistic about the progress they've made with therapeutics and vaccines. There's 100 and so efforts going on in the world right now to fight the virus. And we need a few of those to be successful. And hopefully they'll be successful in short order. Until then, we are going to be what I'll call an 80% economy, an economy shifting towards an e-economy. You've seen big increases in any kind of e-companies in terms of getting deliveries at home, food, goods, actually a boom in that area, where other businesses have suffered, especially businesses that require close contact.
Meantime, without a vaccine, the health risks continue. Let's talk about what that means for basketball. How long do you expect the NBA to continue playing without fans, and how long before that becomes a financial burden?
Well, we're really just focused now at the NBA level on having a great games in Orlando. Adam Silver and his team and the Board of Governors have put safety first for the players, and therefore there won't be fans. And they're designing a kind of a bubble environment in the Disney facility in Orlando to keep the players safe and keep the staff safe. So right now, all the focus is on setting up that facility and making sure that the players are trained and safe, and we can go back to having some basketball, which I think is desperately needed.
That might be fine for finishing this season, but is that a sustainable approach for next season and beyond? You have to be thinking about that.
Well, we're studying next season as well, but I think the real focus is on getting this season done safely. Adam and Bob Iger always say it's about data, it's not about dates. So we'll see how it comes along. If we get therapeutics and a vaccine sooner than expected, we'll see fans back in the stadium sooner. If we don't, there'll have to be adjustments made, and we'll be working those out as soon as the season ends for next year.
Meantime, we're also in the middle of a social crisis and the momentum in the Black Lives Matter movement. I'm curious how you've been addressing this at the team level and also through Bain Capital, not just through your own the way that your own firm is built, but also the companies that you fund.
Well, it's been just extremely disheartening to see the events of the last few weeks. We are redoubling our efforts at the Bain Capital level, the NBA level, the Celtics level to address this social injustice. I had thought, like many people, that we were making progress. We certainly have not made the progress we need to make. No one could watch that video of George Floyd and not think that. And specifically, Bain Capital has come up with a program to invest $100 million in social justice initiatives over the next 10 years. And we're working to specify where those initiatives would be, a major commitment to Boston and economic empowerment. And we're doing the same thing at the Celtics and looking at how we can really unite with our players, our investors, our fans to really make change. I haven't seen, since I unfortunately grew up in the 60s and was almost drafted for Vietnam. And fortunately, there were huge protests and people taking the streets, and we got that war ended. I haven't seen the country mobilize like that since then. And we deserve to mobilize and deserve to get out there because we have to make change at all these levels. And I think it starts with each of our businesses and the companies that we're working with. And we're really going to redouble our efforts. We were making progress we thought, and we are making progress, but it's not enough, and it's got to be a lot more. And I think it's kind of an issue that is not a quick fix, but we have to pay attention to it and really drive and change the situation over the next decade or two. So the folks at Bain Capital are united to do that. The folks at the Celtics are united to do that, and the whole NBA is behind that effort. We really must make that that change in this country.
Meantime, when it comes to the investing landscape, it seems like your rivals are building bigger and bigger funds to chase venture and growth equity investing, whether it's KKR or Blackstone. TPG already has a sizable business there. A lot of hedge funds are getting into private market investing as well. Does this new money know what it's doing and understand the returns they're trying to chase?
Well, Emily, it's really interesting. I remember doing interviews in the 80s, in the late 80s, and the question was: are there too many people in private equity, or are there too many venture firms? And at the time, I thought, wow, the industry was growing, and maybe there was. But it turns out that the model of private equity and growth capital has worked very, very well. The governance model, and the firms and Bain Capital, I think, leading the way, driving transformations of businesses. So we've had excellent returns for our investors, and we've created a global firm with 1,000 people and $100 billion of capital under management that stemmed from the learnings of Bain and Company on how to really drive and make companies great and have them grow again. And I think the industry has grown because it's a great business model, and there's plenty of room out there, and you're seeing many more companies go through many rounds, from venture to mid-market, all the way up to large cap deals, pre-public for companies. That I think Geo just raised something greater than $10 billion into that investment alone. That couldn't have been done 25 or 30 years ago. So the business is now global, and it spans every asset class. And I think with the state of low interest rates and how high the markets are right now, people are turning to alternate assets to capture that alpha. It's a very bespoke business, and people who do it well will be able to get great returns.
We'll have to leave it there. Steve, thank you so much for joining us. Steve Paliuca, co-chair of Bain Capital, owner of the Boston Celtics, and thanks so much to our TV viewers and radio listeners. This is Bloomberg.